I'm not going to introduce the speakers and follow their bios. I think they can introduce themselves when they talk. It's much easier to ask somebody to introduce themselves than for me to read from a piece of paper. So welcome to session F, and without any further ado, I'm going to pass over to Mukami to start our presentation. Thank you very much.
Good afternoon and good morning. I'm also from South Africa, or rather I'm based in South Africa, so I am still a bit jet lagged, and I do concur with the sentiments. Happy National Reconciliation Week. It's really great to be in Australia for this presentation and for this session. And for me, it's really personally great to be back where I started my actuarial profession. So I started working in PwC in consulting in Sydney in the GI team, and now I am a life and health sustainability actuary in the team at C3. So thank you for the organizers of the ICA for the opportunity to share. Sustainability has many definitions, and we won't belabor what we've had today in the sessions. But for us, meeting the needs of the present without compromising the ability of the future generations to meet their own needs, and without compromising the needs of subsets of our society to meet their own needs, is how we define sustainability. We believe our presentation is quite apt for the time we're living in, and we will be discussing life and health insurance inequality and inclusion as a macro trend, sharing our research around the levels of inequality in different markets on the life and health side, with a particular focus on mortality, as well as the factors that impact insurance inclusion in various markets, based on our recently released research piece, the C3 Inclusion Radar, which, if you haven't downloaded, I will ask you to please go on our C3 Institute website and get it. And what is this report? So the hypothesis we have is that the reasons why life and health insurance products, processes, and pricing have been designed in what we think is an unsustainable manner is because we've designed them around a subset of society that is not representative of the spectrum of the wider society. So we believe that the reasons for this problem can be understood, better understood, and more than that, used to change the trend. Yeah? This is our contribution to equipping our industry to action. As stated in the morning, we need to think of the right answer, not the correct answer, as actuaries, and I think this is definitely a correct answer because it pushes us to action. We are focused on action as these trends have existed for years, as we will show you in our report. And for me, for example, in Swiss Re, my role has been 100% sustainability on the life and health side in East and West Africa. And as much as we're looking at it from a macro level, I have participated in this report as a primary respondent. And my colleague, Melissa, who's in charge of our global sustainability life and health piece, will obviously share with you a lot of the macro trends that also impact Australia and Asia Pacific. So having this tool, as I said, I hope you have downloaded it, will enable us to understand the drivers, and it's quite timely. As a hint, there are 3 A's that we'll share, and I will now continue the presentation. Now, ESG is now a buzzword, right? And the increasing focus on sustainability is something that we as a profession have embraced. The environmental effects have been well understood for many years, but the social effects are also strongly intertwined. And not to belabor again the points that have been made in the morning, the pressure on the environment has been present for some time, but the social requirements are growing in prominence. Let's look at the pandemic recovery, which was really short-lived, not as strong as expected, and now we have the impact of the European war, and rising inflation, and just all the social instability we see around the world. The backdrop, or one of the backdrops of this inclusion radar, is research that we as Swiss Re have done around the resilience index. So I really want to explain that. In 2022, we did publish Swiss Re Resilience Index, and the sustained rise in inequality will further weigh on economic growth as it impacts productivity and aggregate demand. The cyclical recovery in both macroeconomic and insurance resilience in 2021 could not hide the fact that deep structural reforms are still needed to drive long-term growth. Case in point, the UN Human Development Index declined in 2020 and 2021, 2 years in a row for the first time. The protection gap you see here is $433 billion, and that's the mortality protection gap. I mentioned that we would focus on mortality because during the pandemic, we saw a slight improvement in the health protection gap. However, mortality has continued to grow as a gap, and the index measure, which is the inverse of this gap, so this 433 billion is a premium equivalent value of the unmet global life insurance need. So it's an opportunity for us, and we know this. We know insurance penetration is low. Interestingly, this figure is mostly from emerging markets, and emerging Asia Pacific was actually the largest contributor. For interest, it's 166 billion for the advanced markets. Again, this report, our Swiss Re Resilience Index, is something you can also get from our Swiss Re Institute website. This graph makes us quite sad. I think we were discussing it yesterday with Melissa when we both got to Sydney. She came from Zurich, I came from Cape Town. One is an advanced market, one is an emerging market. 20 years is what this research is based on. And what we're seeing here is the inverse of the mortality gap in a real basis, because 100% or one is where we would expect the level of protection to be for a breadwinner's family in the event of their demise. And unfortunately, insurance and assets only cover, what we're seeing in the bottom part of the graph, right? So interestingly, it has been stagnant for 20 years, even as life insurance has grown, even as penetration has seemed to increase, and it's been worse for emerging markets where I work. This is something I've lived and tried to resolve in the work that I do on a day-to-day basis for years, but it has been difficult, and I think we're at the point where we do feel that the life insurance industry has sort of failed because half the world's mortality needs are unmet. So this report that we want to share with you is like a tool that we really hope can, as I said, bring us to action. So I'll really hand over to Melissa to tell us more about the actual trends in the report and to inspire us, like we have been this morning, to action, because we're all part of the bigger picture and the process. Thank you.
Hi, everybody. Just a quick introduction to myself. So I, too, am South African originally and worked in the South African market for a number of years, but I'm now based in Zurich at our head office for Swiss Re and have been for the last 10 years working in various regional and now a global role where I look after our sustainability strategy in our life and health business globally. So to pick up where Mukami left off and continue, I hope you have a good sense of the context that our industry finds itself in. This is potentially a really boring graph, possibly the most boring graph you will see in the convention, because it is so flat. There's really nothing happening here, with the exception of perhaps in the emerging markets where there's even a bit of a decline. And although we might see our premium volumes growing in the life and health industry from year to year, the need for the products that we offer is growing at a faster pace than our premiums are keeping up with. And that's the call to action for our industry. So with that in mind, we were inspired to develop the Inclusion Radar, a further piece of research that helps to not just measure the size of the gap, but answer the questions around why it exists. What do we really need to do to address that gap and make a significant change in the pattern of that very, very boring graph? So we built the research around 3 A's. This morning you heard from Inga Biel, she spoke about the 3 D's, so I'm going to introduce you now 3 A's, which are the availability, the accessibility, and the affordability of life and health protection. Our methodology involved 5 steps. Firstly, we did a selection of 16 markets globally that we chose to try and represent as fairly as possible a good sample of countries around the world, with a bit of a bias towards larger ones. So the selection of countries that we chose, in fact, we estimate covers about half of the world's global life insurance premiums. There is also a bit of a bias rather towards emerging markets, where we believe this research and this understanding is more important. So 11 emerging markets and 5 advanced. We then proceeded to develop the framework around those 3 A's. What sort of data indicators can we collect, can we look for that help to explain those 3 A factors? We then needed to transform that data, quite simple approaches, just to transform the different data fields into scores between 0 and 1, and weight those relative scores in the 3 categories, availability, accessibility, and affordability, to ultimately synthesize that data and come up with an inclusion score for each of the 16 countries. Jumping all the way forward to the final results of the research, this is how we scored the 16 markets that were studied. So on a spectrum between 0 and 1, 0 representing a market that's not inclusive at all, and 1 being a perfect result. You'll see I've cheated a little bit to squish the graph. You don't quite see the 2 tail ends, and there really is a clustering of markets rather in the middle section of that 0 to 1 range. There's also, as you would expect to see, the advanced markets are rather towards the top end of the range, whereas the emerging markets have bigger struggles. However, there are some emerging markets in the leading pack, and there are some advanced markets in the middle or trailing pack. So there isn't necessarily just a straight formula for where a market finds itself on the spectrum. However, I don't think the value in this research is really ranking countries or scoring countries. It's really in the more granular information behind those scores. And the work, the Inclusion Radar, gets its name from this particular chart on the right-hand side of the slide. I've chosen to focus on Australia just for obvious reasons, where we sit today, to give you a sense of the granularity of information here that can be used to call markets to action, and with things that the industry can actually address. So in the case of Australia, actually, it was one of the weakest performers out of the advanced markets. That's a little bit surprising. It does exhibit all the strengths and positive traits that you would expect of an advanced market. Financial literacy is high, but there are significant weaknesses as well. So particularly around the availability, the extent to which there's innovation in the Australian context, and also accessibility. There are clearly some distribution challenges being faced in an Australian context. On the other hand, it scores reasonably well in affordability, being an advanced market and where socioeconomic well-being is relatively high compared to some of the other markets that we studied. Another interesting way to look at the results here is to look at the pattern per country across the 3 A's. They are sort of sequential, so products need to be available first, they need to exist in reality, then they need to be placed in a context where they are more accessible, and thirdly, they need to be priced at a point that people can actually afford to buy them and value them at that price. And so there is a natural chronological order here. There are very different patterns from market to market in terms of what they look like across those 3 A's. Just honing in particular on Australia, It's the light green line here in the chart. You can see that firstly the level of it is rather closer to the emerging markets average than with its advanced market peers, and also it exhibits a really strange shape in that its affordability score, as I mentioned, is actually a little bit higher than availability and accessibility, so an unusual case. I think the point I want to raise here is that every market is starting from a different position, and we may look at a global protection gap in aggregate, but actually the solutions that we need to come up with need to be tailored, understanding the local market context and what's needed in a local market to bring about change. So continuing with a few more of the radars just focusing again on the Asia-Pacific region, where we know protection gaps are actually largest, and also given where we sit today and expecting more of an Asia contingent in the audience. The three emerging Asian markets we included in the study were India, Indonesia, and Vietnam. We also included Japan as an advanced market. And again, here you can see that the radars look quite different from market to market. So that point again around each market starting from a different position. Just to highlight a little bit the case for India, you may remember India was somewhere in the middle of that spectrum chart I showed earlier. It's actually one of the markets that performs reasonably well in terms of inclusion compared to others in the emerging market sample. So I would really encourage you just to look up the report. It's available for easy download on swissre.com. If you search for inclusion radar, you should be able to find it, and you can see the other 12 country radars that I haven't shown on the slides today. So just jumping to what points I would conclude with. There really is no silver bullet for solving the protection gap. I think for a long time we've expected that product innovation is perhaps that silver bullet, but having worked a number of years in my career in product development, it really is not the solution on its own. It is potentially part of the solution, but not the solution in entirety. And there are really these four areas that we think there is room for improvement for the life and health industry across the world. So to cover them off quickly, when it comes to market research, where does that need to be focused? And I think that the focus really needs to be on underserved communities, the sorts of customers that we typically don't go after, that look different from the typical customer who usually buys a life insurance policy. And those communities are growing, and their vulnerabilities are often greater than the vulnerabilities of the customers that we traditionally do serve. And so there really is a strong case, both a social one and a commercial case, to focus your research efforts and resources on underserved communities. Secondly, partnerships. I think there are two kinds of partnerships that are important and valuable. So firstly, digital partners or insurtech type partners. It was good to hear one of the Ds, the 3 Ds of Ingeviel this morning, digitalization, so that is quite consistent. And the second kind of partnership, which I think is even more important, are the sorts of strategic partners who can help in the insurance industry to achieve scale. So to access pools of customers who are currently beyond the reach of the industry, and that are significant enough in scale for this to make commercial sense for ultimately the shareholders that our companies serve as well. Then the third area, so product innovation. As I said, product innovation is definitely not the silver bullet, but it is part of the solution. I would argue that the kind of innovation that we need here is simplification. I think we tend to make our products more complicated. We tend to add rather more bells and whistles and fancy things. Actually, I think that makes it more difficult for customers to relate to what we sell, particularly in these underserved communities who are often lower income segments, who cannot necessarily deal with the sort of complexity that we often introduce into products. And this is very difficult, but we really need to push ourselves to rather simplify than make our products more fancy. And then lastly, regulatory dialogue. So regulation differs quite extensively between the emerging markets and the advanced markets, and the extent to which it strives to protect consumers, or the extent to which it supports and fosters innovation. I think there's lots here that can be learned from one market to the other, but what I think is crucially important is that there really does need to be a balance in how in what regulations are in place, a balance between making sure that the customers that we do serve, and hopefully the new customers who are currently underserved that we serve in the future, are adequately protected. But that is balanced against there being sufficient support from a regulatory point of view in terms of the companies that we work for being innovative, being able to test new things that may fail or may succeed. But over time, that helps to evolve the products and services that we offer and help them to reach groups of customers that are currently locked out of the benefits that our products provide. That's all I have to say. Do we have time for Q&A?
We do. We have 10 minutes for Q&A. You did 10 minutes and 10 seconds, to be precise. So, yeah, thank you, Nadia and Mukamba. Just to remind you to submit questions, you go on to the app under what's happening now on the app. If I just get there myself, just to make sure I direct everybody correctly. You go to the Now On icon at the bottom of the app, tap on that, tap on Room F, and then you will have an opportunity to ask questions just below that. If, like me, navigating the technology is a challenge, please also raise your hand, and we will go to the old-fashioned way of asking a question. So we have one question on the app already. So it says, insurance is known to be sold and not bought. How do we close the protection gap without causing harm to consumers who would need to be sold these products, specifically when selling insurance is so expensive? How do we show value for these products when most consumers will never get anything tangible out of it?
So firstly, I would challenge the conception that most consumers would never get anything tangible about it. I think the implication behind that is, especially for life insurance, you only receive a benefit when you die. The truth is, you do receive a benefit when you are alive because you have, or your family has the peace of mind that they are protected, irrespective of what may happen on any day. So I think anybody who has a life insurance policy in place receives a benefit, whether they ultimately claim or not. In terms of answering the question around insurance being bought, sold and not bought, I think that's clearly a very significant challenge for our industry and something I feel we can invest more effort in to change the product to potentially become something that is bought and not always only sold. Ultimately, to reach these groups of underserved and often lower income consumers, we have to find ways of making our products meaningful and simple enough that advice may not always be part of how these products are sold, or we should be providing tools via digital solutions, technology that creates self-service advice rather than relying on human-to-human advice in order to provide them.
Maybe just to add to that, David, so I've gone on the app and I've seen it's David. I don't know where you're asking this question from, but maybe what I'll add to what Melissa has said is the key point she brought out at the end: context, context, context. So when I read this, it just takes me back to where I'm from, Kenya originally, where we've had challenges with mis-selling. There's a lot of lack of trust, right? But there are markets where trust is high, right, to the insurance industry and the consumer. So the question is, what is your context and what's the problem we're trying to solve? So for markets such as, I guess, the one you're referring to, David, I don't want to make an assumption about where you're from, the solutions are different, and I can then maybe speak from my point or my vantage, where things like regulation and strengthening it become more important, because then that's how you build the trust, right? So as I said, context, 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 and solving this problem is something that can happen. So I think we've just been doing it the wrong way with trying to solve it like the same way across all the markets. So I think it's something, obviously, as Swiss Re, we can definitely support you on the journey on.
Thank you. I think I'm going to take the chair's prerogative just to add that one of the things we saw in South Africa is all of our lapse rates reduced on our insurance policies through COVID, because people were seeing the value of the product, which was an interesting sort of side impact. that we needed a global pandemic to help with that problem of bought not sold. The questions are coming in thick and fast, so I think from a technical point of view, a question: how did you assess accessibility?
Let me perhaps also jump back to, if I can, to this slide, just using the example of Australia again. So for each of the 3 A's, we looked at 3 different sub-indicators, and each of those sub-indicators has a number of different data points underlying that. So the first indicator we looked at was financial literacy. So one of the some of the data points we used around that was information around access to bank accounts, access to credit, as an indicator of financial literacy. Simply having a bank account does make it a lot easier to work with a customer. The fact that they are banked and familiar at least with some form of a formal financial services product. The second one, distribution diversity. Here we looked at 2 things. So we looked at traditional distribution channels for life insurance, the extent to which they are representative of the underlying population of the country, or whether there were potentially issues around ethnic diversity in the or racial diversity in the distribution channel, if that was relevant for the country. Gender diversity was another one that came up often as an issue in how insurance is sold. One interesting exception, Japan, which has a predominantly female distribution network. Quite interesting. You can read more about Japan in the report. And the other aspect of distribution diversity we looked at was mobile phone penetration per country, because that sort of technology can facilitate different ways of communicating with and distributing to customers within that market. And then the third one, life insurance reach, was quite simply looking at the life insurance penetration rate as a pretty strong indicator of whether distribution is working or not in that particular market.
So we've clearly got a number of Australians in the room who are asking much the same question. Did you bring into, let me try and find it again, did you bring into your considerations in the specifics of the Australian environment the compulsory insurance that exists within the superannuation system?
Yes, we did. And Australia is not unique in that it has quite an established group life market that exists in many, if not all, of the markets that we studied. We actually included it in the availability dimension, the theory being, well, the hypothesis being that often when we see particularly emerging markets developing, from a life insurance point of view, often the first product that starts to be available and exist in that market is group life insurance, and retail products tend to come later or mature later. And so just creating a form of life insurance through group in that market helps insurers to collect data, it helps to understand underlying experience, it helps to make life insurance familiar to the local population, and so it helps to strengthen that availability dimension. So it is one of the data fields under the skills and market development indicator for availability.
So let me ask, and again, there are a lot of questions coming through, so we might have to cycle back to some of these in the last session, but one that I had is product design in this space of product. Do you see adaptation of existing products or complete innovation as being a way to penetrate this? Is it sort of taking existing products that exist in other markets and bringing those into the mix, or is it looking at total innovation?
I think my preference is actually the former. I'm not against total innovation, but I think actually fundamentally the products that we sell in life insurance at their core, at their basis of what they are, a very basic term life cover is good. And it has tremendous social value, not just to the family, but ultimately the community around that family, society as a whole. And that's why we see this inclusion topic as being so important within the sustainability space for life and health insurance.
Yeah, maybe just to say again, context, because I guess where I'm from in Kenya, and sorry, I just keep, looking at that. So in South Africa, funeral insurance has high penetration. It's a simple product, but it it's successful because of the context and the culture is. But in other places in Africa, for example, debt is like a taboo subject, so you need to sell a different product. So just to add in that context.
So another question here, which is a question in choosing your selection of countries to look at. China might be seen to be a sort of a bit of an anomaly in that it's not there, given that the market is so big.
Very, very fair comment and astute observation. At the time that we commissioned this research, which was frankly a year and a half ago, the team that we pulled together to look at this was rather weaker in terms of understanding the Chinese market. And just for expediency reasons, we decided not to keep China in focus. It is one, though, that I hope to potentially add when we do update this research in time.
Thank you. I'm just trying to see, there's so many questions here, I'm trying to sort of pull themes out.
Thank you.
Inclusive insurance for undocumented migrants, refugees, migrant workers, people who are perhaps not as integrated into the formal societal structures, for want of a better word, banking, et cetera, et cetera. How do you think that might impact some of these elements of your research?
So migrant workers and people of immigrant origin is actually one of 8 different underserved communities that we have identified at Swiss Re that we'd love to do more business on. It is sometimes, it depends on the context from country to country. Each market tends to have its own tweaks on any sort of global life and health underwriting philosophy. But there's definitely ways that we can accommodate migrant workers and potentially increase risks around that. There's really no such thing, I believe, as a bad risk or a high risk. It's really just about getting the product and the price right so that it works. But it's absolutely a growing topic, and I think it's a community that's only going to increase in size. So if we as an industry don't figure out ways that we can accommodate these sorts of communities within our risk appetite, then we're going to stay stagnant, and that graph is going to stay boring into the future.
Cool. Well, thank you very much to Melissa and Mukami. I have a red light flashing at me, which means that I have to move on to the next speaker, despite us having a whole load of questions. So I apologize if I didn't grab your question into the mix, but I'm sure the speakers will be very happy to answer any of your questions separately. So can I just ask you to join me in thanking the speakers.